Hey everybody, welcome back to another stock analysis, and today we are looking into Victoria's Secret. And basically, they have been underperforming for a while now, but apparently they are due for a turnaround fairly soon, according to my good friend over at Dumpster Dive Trades. Make sure to go check out his channel. But looking like a promising company to get into, so we are going to check them out, see what's up, and give an analysis of the situation, focusing around financials. So if you're interested, make sure to subscribe, and let's get into Victoria's Secret. So, Victoria's Secret, if you don't know what they are, you can read about them here. Very interesting company, but moving on from that, we're focusing on financials today. Some industry metrics to take note of. Same-store sales looks like they are going to be performing fairly well throughout 2025. The 2026 estimate is actually here, and that shows slight gains as well. Stores opened is looking like it is underperforming compared to stores closed, at least for the January 2025 quarter. These dates here are always a little bit confusing to look at, so it's not always the best thing to see, but basically it looks like their stores, total number of stores are expected to increase over the next year, which is good, but also they have seen some decreases in the very recent past. So it is something to take note of. So for the company, market cap is at 1.5 billion, which honestly, considering they have 800 stores right now, that seems kind of low. At least in my opinion. They did just recently go public, which is shocking because I feel like they've been a fairly large brand for a very long time now, but not the craziest market cap. So target price at $27 a share. Long-term growth rate is very slightly negative. Right now we are at $19 a share, so there is some expected upside there, which is always nice to see. If we do look at their chart over the past few years, you can see it has been pretty rough for them since their IPO. They really weren't positive on their IPO price for very long before dipping underneath it. So not great there. Clearly very significantly underperforming the market, especially in the past few weeks, where they saw a very serious downturn in their stock price. If we go into the growth summary here, we can kind of see it's not really projected to perform fairly well. So I think short term, it could be a good area for a trade. Possibly, if we look at their chart here, we can see this is on the weekly time frame. If we go to the daily, you can see they have been declining very significantly ever since their last earnings report. The one that just came out wasn't really that positive either, based on how the stock price moved. But overall, I think we could see a recovery. It's just a matter of when that will happen. But one other thing to note while we're on this chart here, before we get into their earnings, is that I do have a new indicator up here which shows their workforce, which I think is a fairly solid indicator for a company just to see how they've been growing. So a really good example of this is if I go into Trade Desk and I show their workforce. Trade Desk stock has been massively increasing recently, and as you can see, their workforce has been massively increasing along with it, growing by double digits every single year for the past 5 years. So that's just something to take into consideration there. But anyway, let's go back over to Victoria's Secret here. So their workforce has declined for 2 consecutive years now. And before we get into their financials, let's go through some of their earnings. So starting off with the recap of their most recent earnings, which is Q4 2024. Looking at the operating metrics. So stores and direct saw a 5% increase versus a 3.8 estimate. So fairly solid beat there. Revenue looks like they beat on almost everything other than international. Gross margin came in above. SG&A came in below. Operating came in about 1.5 points above as well. And inventory actually declined year over year while revenue increased. So overall, that is actually in terms of these metrics, the report was very good. Now, we did see the stock price fall in the days following the report, so there are probably some other things to speak on here about why it could be negative, and hopefully we will see that in this report here. So let me go back up to the top here. So first of all, sales increase of 5% for the fourth quarter, which is fairly solid. Reading through the overview here, I'm pleased with the strength of our fourth quarter holiday results, which saw sales up in both Victoria's Secret and Pink, which are their 2 major brands. Sales increased across most major categories in stores and digital. We won in big moments of the quarter and gained more than our fair share of the traffic in the mall and online, which is fairly good. We connected with our customer through merchandise offerings. As we look to 25, we recognize there are near-term headwinds and uncertainty, which we will manage aggressively while also working to build on our solid foundation. So overall, it seems like the numbers are okay. Let's look through the fourth quarter results. So 1% increase for net sales. Total comparable sales for fourth quarter 2024 increased 5%. Net income. Okay, so year over year, it looks like their net income grew by about 10 million, which is fairly solid. Operating income also grew by about 10 million. So at least the margins there are a little bit more consistent. Let me see here. Anything else? A change in its gift cards. Okay, nothing else too major there. Extra week in the fourth quarter 2023 represented 80 million in sales, approximately 20 million in operating income. So in 2023, another thing is that they had an extra week in that quarter. So it looks like their numbers are actually a lot better than 2023 when you adjust for that extra week. So that's also something to consider as well. Full year fiscal results, again, 1.1% increase in net sales compared to 6.2 compared to 6.18. So very slight increase. Really nothing too crazy there. Net income. Okay, they beat their net income massively by about 50 million year over year, which is fairly good. Profitability increasing while their sales are still staying the same, which is a very good sign for the company, although sales growth at the end of the day is king. And then other than that, it looks like we do have some full year 2025 outlook. So net sales for first quarter to be in the range of 1.3 billion compared to last quarter, which was compared to last year, which was actually a little bit higher. So they're expecting a decline in sales year over year. And then operating income to be 10 to 30 million, which is not good at all when we consider that their last operating income, let's see, for the fourth quarter was, let me find it here, not great. 2024 was 299 million. So I do understand it is a holiday season. It is a cyclical company, but even still, that kind of drop just seems very drastic. Not great. Net sales fiscal year 6.2 to 6.3. So there is a slight increase there, which is pretty solid in terms of the percentage increase. And operating income will be 300 to 350. So a pretty big uptick there as well. So they are expected, which is really good. They are expecting another year of increased efficiency with the company, which is awesome to see because it seems like the year over year gain from 23 to 24 was really solid. So if that continues, we'll really just kind of see a snowball effect in their margin growth. And I think we will see that coming up in their ratios. But let's go through the financials first. So over the past couple of years, their sales have been a little bit stagnant. They saw a high in 2019, and it looks like they've been declining for a while. 2025, they already have preliminary results, which is kind of surprising. But if we look, their sales have just been declining significantly over the past few years. 2024, they're at 6.2 now. Net income is also dropping very significantly. Lowest they've seen even since before the pandemic. So not great there overall. Total shares, it looks like, has been dropping very significantly, which this is one thing I've been seeing with a lot of companies is they're putting a ton of money into lessening their total number of shares, but yet their growth is stagnating. They're not really seeing any profitability improvements, and yet they're still dumping hundreds of millions, if not billions of dollars into repurchasing their stock. I don't really know why companies do that. I can't really tell you, but overall, I just don't think it's a great thing. Looking at fiscal quarters, which we should be able to see here. So their January quarter looks like is their seasonal high, which is good. Let me see here. 2.2, 2.02, 2.08, and 2.1 is the preliminary result for the next quarter. Overall, the growth here just does not seem that great. I really just want to see how their total shares have been doing. So it looks like they bottomed out around 77 million shares, and now they're actually starting to dilute again, which again, that's kind of the thing that we've been seeing where why are they repurchasing shares when their demand is decreasing? That doesn't really make sense. You should be reinvesting that money in a company. But anyway, that's just kind of a complaint that I have with a lot of different companies. Looking at the assets now, let's go to the yearly view. So total assets have, well, again, back in 2020, when they went public, it seems like they really just weren't in a good place as a company. That's probably why they went public, to try to restructure themselves using the extra money. But either way, assets have been falling semi consistently. They have 270 million in cash compared to just under 3 billion in debt. So not a great situation there either. Really does not look good for them at all, considering they have almost double the debt of their entire market cap. It really does not look like the company is in a good position whatsoever. Let's get into cash flows and see how they've been doing here. So operating cash flows, again, have declined over the past couple of years. They're at one of the lowest they've seen since the pandemic once again. Investing cash flow looks okay. Apparently, they did have a fairly large acquisition in 2023, but clearly that has not paid off very well at all. Other than that, you could see they have been repurchasing their stock per year, which is, again, considering their numbers have been declining, their sales aren't really growing that well. Why would you put just about $600-700 million into repurchasing your stock? I have no idea, but either way, it does not look great. Free cash flow is still okay. It is positive, which is kind of the bare minimum that we've been seeing for free cash flow. So overall, not great. But again, it is the lowest, again, since they've seen since the pandemic. So anyway, moving on. One last thing, the ratio analysis. So hopefully if we go into the quarters here, we will be able to see some improvements, but we do not want to completely ignore this 2025 estimate. I don't know why they have that already, but it looks like we saw some year-over-year improvement. Net margin, however, really has been suffering. This is the lowest they've seen in a long time. Which is not great. If we look at the debt to equity, oh my God, debt to equity is at 600%. It has been coming down, but either way, this ratio is massively overinflated. We want to see that well under 100% for a healthy debt load for a company, and being at 650% is just insane. That is terrible. So overall, it does not look good there at all. Saying that, I think that's just about it. I can see what that acquisition was for them. And it looks like it was Adore Me Inc., where they bought them for about 400 million. And that is a apparel and footwear company back in 2022. So that is something. They did have a recent large acquisition, but overall it does not seem to have a very meaningful effect on their portfolio, or on their stock, I should say. Let's look at the quarter over quarter growth and see how that's doing as well. So overall, we're seeing gross margin slightly improve every single quarter since 2023. And it is projected to continue that way going into 2025, which is good. SGA to sales is dropping as well, but honestly, they might want to start increasing that again, because the only way to really grow your sales today is to market, and it just seems like they're not really effectively doing that. So that is something to consider. Operating margin has seen a lot of improvement over the past 5 or 6 quarters as well, which is fine. Same thing with net margin. So we are seeing gradual, consistent improvements here, and it is projected to continue improving into 2025 based on these numbers here. But overall, I feel like it's just the debt situation is kind of not good at all. Let's actually see how that has been improving. So yeah, it went back up over the past quarter, which isn't great at all. It was actually back over 1,000 at the end of 2023. So overall, I would say it just doesn't seem like they are in the best position financially at all. We're seeing some slight improvements, but at this point, is it enough to really make this company attractive in any way short term? And in my opinion, no, not really. So I think that's where I'm going to cut it here. That's all I've really got for Victoria's Secret. Thanks for watching. Make sure to subscribe if you haven't. And yeah, that's it.